All right, let's dive in. Here at the start of 2026, something just feels different in the crypto markets. The usual noise, the hype, it's been replaced by something quieter, something way more deliberate. For years, XRP holders have been looking for a sign, and it looks like that signal has finally arrived. But get this, it didn't come from where anyone expected.
What we're seeing is this fundamental shift, and this slide just lays it out perfectly. We're literally moving from one era to the next. The then column, that was all about retail excitement, right? Stories about going to the moon, community drama, and of course that never-ending legal battle. But now it's a completely different ballgame. We're talking cold, hard, institutional-grade analysis. The whole conversation has pivoted from hype to actual utility.
So, what kicked this all off? Well, that signal I mentioned, it wasn't a court ruling, it wasn't a community update. Nope, it came from the absolute top of the global financial system.
Just look at that number, $1.6 trillion. That is the sheer scale of Franklin Templeton, a 75-year-old titan of global finance. See, when an institution of this size makes a move, they don't just join a market. They validate it for the entire old-school financial world. Now, what's really fascinating here is the language they started using. A research note from Franklin Templeton started making the rounds, and it wasn't just another report. The words they chose, that was the tell. They stopped calling XRP speculative. Instead, they started using these words with weight, words like fundamental and infrastructure. And this quote right here, this is the whole thing in a nutshell. When a trillion-dollar manager calls your asset an important building block, that's a massive seal of approval. It means they're telling their clients, we're talking pension funds, sovereign wealth funds, that this is a necessary piece of the puzzle for any serious digital asset portfolio. Just like that, the retail era was over, and the institutional era had officially begun. But listen, this didn't just happen overnight. This timeline shows it was a deliberate sequence of events. It all started with Ripple's stablecoin, RLUSD, back in late 2024. That gave institutions a stable, regulated way to actually use the network. Then came the spot XRP ETFs in late 2025, which created a familiar on-ramp for all that big money. Those two moves basically set the stage for these institutional reports we're seeing now, the ones that are totally reframing the narrative. Okay. So why are these institutions suddenly so interested? It's not random. Their focus is on a very, very specific use case. It's all about understanding what XRP was actually built to do, something that goes way beyond its daily price chart. And here it is. This is the mission. The XRP ledger was designed from the ground up to fix the insane friction in the $150 trillion cross-border payments market. Institutions aren't looking for the next meme coin, They're hunting for technology that solves real-world trillion-dollar edicts, and XRP's laser focus on this one area makes it a perfect fit. All right, let's talk about maybe the most underrated piece of this whole puzzle, RLUSD. Think of it as the stable fuel for the XRP engine. It's a regulated, dollar-backed stablecoin which gives these super conservative institutions the safety net they absolutely need. It lets them tap into the speed of the ledger without having to worry about the price of a crypto asset bouncing around every second. So how does this all click together? This slide makes it super simple. It's a dual asset solution. First, a bank uses the stablecoin RLUSD to represent the cash it wants to send. Then, for literally just a few seconds, XRP steps in as the bridge asset to provide the liquidity for the transfer. And the result? Exactly what banks crave. Near instant, super cheap, and totally compliant settlement. This simple little dance is what transforms the ledger from a speculative playground into a professional-grade settlement layer. And this really gets to the heart of it all. For institutions, the real long-term value isn't in some short-term price pump. It's in the quality and the efficiency of the pipes that move all that money. RLUSD gives them the stability, and XRP gives them the speed. Okay, so this new focus on utility and infrastructure is creating real-world demand. But what happens when that brand new demand slams headfirst into a supply that's shrinking fast? Well, that's where the market dynamics get very, very interesting. Just take a look at this data. It's pretty stark. In early 2025, there were about 4 billion XRP just sitting on Western exchanges. Fast forward to early 2026, and that number has crashed to just 1.5 billion. That's an 8-year low. And this isn't retail panic selling. This is a massive absorption of supply. And check out how fast this happened. A 57% drop in the available supply in under 3 months. I mean, come on. The on-chain data, which is the public record of all this stuff, it's showing record amounts of XRP flowing out of exchanges and into deep cold storage and institutional custody. So let's be crystal clear about this. This is not your average retail investor behavior. No way. This is the footprint of large-scale ETF consumption. For every single dollar that goes into a spot XRP ETF, the fund has to go out and buy the real asset, taking it off the market. This creates a structural supply imbalance, just sucking up all the sell pressure and locking the asset away for the long haul. And it's this imbalance that's leading huge firms like Standard Chartered to start building brand new price models. They've put out a target of $8 by the end of 2026. Now, this isn't just a random guess. It's a projection based on the cold, hard math of institutional adoption, ETF inflows, and that shrinking supply we just looked at. It's a model based on structure, not just speculation. Okay, so with all this bullish data, it is so easy to get carried away. And that's exactly why this last section is maybe the most important one. We have to talk about how to process this new reality with discipline, not just pure emotion. We're back to this idea of two different eras, but this time it's about two different mindsets. The old retail way of thinking was all about hype, right? Constantly asking, when will it moon? Obsessing over price, reacting emotionally. The new mindset, the one that's required now, is all about structure. It asks, how is the utility actually being integrated? And it focuses on a disciplined, long-term strategy. And a serious word of caution is absolutely necessary here. First off, this is a slow-motion transformation, not a get-rich-quick scheme. Second, just because institutions are here doesn't mean volatility is gone. Remember that sharp drop in late 2025? That happened while ETFs were buying like crazy. Third, these higher price targets are long-term possibilities. They are not short-term promises. And finally, and maybe most importantly, having a plan is infinitely more valuable than chasing rumors. So let's just boil it all down to the key takeaway. The real story here isn't some speculative rocket ship to the moon. The story is that XRP is finally maturing. It's becoming something stronger, more fundamental, and yeah, on the surface, maybe a little less exciting. It's turning into a dull, necessary, high-quality piece of global financial plumbing. And that leaves us with one final question to think about. When a technology stops being the source of daily hype and just becomes boring, essential infrastructure that the world relies on, has it, at that point, finally become truly priceless? Something to chew on. Thanks for watching.